In the new world, growth is for the elite and pain is for the citizens. A great divide is forming between the extreme wealthy and everyone else. Economic growth is a fairy tale of wonderful delight, but surely is no longer occurring. The statistics are there to prove this, and even high-level bankers are willing to admit it. It's time to wake up to this reality. Let's take a look at this article right here talking about Goldman Sachs' new investment derivative. And this is pretty interesting. They're actually Zero Hedge is calling it Fiasco. That's almost the acronym that it is made up of. Investors will have a claim on a pool of dedicated assets. And then they said that there's going to be, instead of funding mortgages or public sector loans, it will provide funding for a portfolio of fixed income securities sourced from Goldman. And investors won't know exactly what's in the pool, and they also have the possibility that the structure will change. So this is exactly how it's happened before, leading up to the financial crisis, where you had all these derivative CDOs and all these other things created that basically nobody ever knew what was inside. It was all garbage, that's for sure. But the best part about this Fiasco here is that it's rated AAA. That's right. You need to get your friends in the rating agencies to give everything, all the garbage you can, a AAA rating. This is a derivative, for those who don't know, just a very simplified version from my book. So for example, you have a home, then you have a mortgage on that home. The mortgage belongs to the bank. The bank piles up all those mortgages in a nice little pile. They throw it into a package here, put a little bow on top, and then they sell it to an investor. Now that seems pretty great. It's diversified because you have homes from all different sectors and all different parts of the country. But what happens when they all decline at the same time? What about worldwide? When you have a global recession, a global depression, well, then you have big problems because they're all going to come crashing down, particularly when they're rated AAA, because people think it's very safe. Fed official warns disappointing growth could foretell the future. And this is the Federal Reserve's #2 official saying this, okay? It's possible that the underperformance reflects a more structural, longer-term shift in the global economy. Now, what have I been saying to you since I began this channel, since I wrote in my book, is that it's a global problem because through globalization, we are all interconnected. All the markets, whether you like it or not, are interconnected. And here we have the Fed official, the #2 guy in charge, saying this information that I've been trying to scream at everyone for years now. Federal Reserve's vice chair warns of long-term damage from the recession, saying that lower productivity growth and labor force participation rates are now permanent features of the economy. That's exactly what I've been saying. You can't outgrow this when there's no real stimulation for real actual growth. He's talking about printing money. They're talking about how this basically doesn't work anymore. And it is true because you cannot just print money to somehow generate wealth. It has never worked like that, and it never will. Let's go on quickly. The same thing may be happening for different reasons in Europe, large emerging economies such as China and elsewhere. He said, forcing the central bankers to recast their understanding of inflation, employment, and growth in general. That's right. You cannot print money and have it generate value, real value in the economy. It doesn't work like that. So now what they're going to do is they're going to create some quote-unquote new tools, and that is supposedly going to fix everything. But the problem itself is central banking, that you cannot have a private or semi-private organization printing the money, loaning it to the government, and then the government has to pay interest on that, and you can never pay back ever because you would have to take more money out from debt in order to pay it back. It's a total scheme to fill the pockets of the bankers. And right here, this is the former Bank of England's Governor Mervyn King saying this: we are beginning to discover that the reason the world recovery is so slow is that monetary policy isn't the answer. and other policies need to be put in place to rebalance the world economy. Now, of course, I probably wouldn't agree with his other policies that need to be put in place. However, take that first sentence there, saying that monetary policy isn't the answer now. And that's exactly correct, because printing money isn't going to solve your problem of debt. How many times do you have to hear Jim Rogers say the same thing over and over again, saying that you cannot fix a problem of debt by adding up more debt? It doesn't make a single ounce of sense, yet they're doing it anyway. And we're having a huge problem in the future because this is obviously getting worse and worse, and you have consistently, you could see this in Europe with the ESM and the ones before it, and you have all of these different acronyms that they set up, and it's all a big joke because they never fix anything. They just shift the debt around, and it causes a problem later down the road. And that's what they're hoping for, is that they can just get through this hump. But that hump has been going on now for years, and it's stalling and it's getting worse, and they're gonna have to ramp up the printing presses, and that is going to create a hyperinflationary scenario. Hope that you like this information, and of course that you will become an insider. It's totally free information, and that's at themoneygps.com. You scroll down to the bottom and fill in your email address, and you get occasional emails from me with short, concise info.